Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 21st, 2016. So again, this week we didn't really see much movement in the stock indices. Stocks went up slightly as reports came in for various companies, and that pushed the index higher or lower. But the high yield bonds, the junk bonds, did hit all-time highs, so this is showing good appetite for risk still. The preferred stock ETF rebounded strongly as bonds attempted to hold support. We'll see if that's going to continue in the future or not. The big news, of course, is the dollar, which I think is breaking out against recent resistance, and dollar is pretty much now in an uptrend against most currencies. It is somewhat overextended, so this may help gold in the short term. So far, again, oil failed to break out, and it could roll over with a vengeance. We'll look at natural gas as it pulls back from 52-week highs, and finally we'll finish off with livestock ETF as it may be showing signs of a reversal. Again, all of this information for informational purposes only. Alright, here is the S&P 500 ETF SPY, our proxy for the market. So, all this week and some of the past week, there were attempts to push the prices lower, but so far the bears have failed, really. And even today on Friday, we had a drop below, initial gap down in the morning, but then the prices closed, above the open, so we had a hollow candlestick. So far I'm seeing that stocks are showing resilience. I mean, look at this spike down and then a hollow red candle. So far I see that stocks are showing resilience, and there's a lot of interest in owning stocks. That is not to say that we cannot break the support at around 211.20 or so. If we do break the support, I think we will revisit the 200-day moving average and the Brexit lows. But again, as I said last week, I think the stock market is bullish in general, and also September, October, November, the October, November, December are one of the most bullish periods in the stock market seasonality. There are some concerns that are creeping into the market, and there is a little bit of a divergence here, and it's a bearish divergence. You can see the advanced decline line. It made a lower low here, and as well as advanced decline volume line also made a lower low just this week. So there's a little bit of a divergence that is happening in the market. Again, divergences are notorious for not working out, so we'll see where this one goes. There is this indicator here, is advanced decline oscillator, basically, and it's now in a negative territory. So I think this is showing oversold conditions, basically, and oversold conditions in an uptrending security is a recipe for a bounce higher. Here's a little bit longer term chart for S&P 500 itself. The thing I want to point out here is, first of all, there is an RSI positive. We have a higher low on RSI, so that's a positive sign. Here down below we have percentage of stocks above the 200-day and the 50-day exponential moving averages, and so far this bounce is not as strong as I would like it to see it, so maybe we'll get another dip and then finally we'll rally. But the longer term picture is clearly bullish, and like, for example, here's the percentage of stocks above the 200-day exponential moving average and the bullish percent index, and we're still well in the bullish territory. We haven't even dropped below 50%. So long term I think it's a bullish market still. Here's a long-term time frame for S&P 500. This is a weekly time frame going back 3 years. So this week we basically had an inside week. This week range is entirely within last week's range. So a breakout out of this range could mean a strong move. I think if we close above last week's range, I think we can easily see all-time highs again. Alternative scenario, of course, is a breakdown below last week low, and then we could see a strong move down, possibly towards the Brexit lows. Now, one very positive sign is that junk bonds hit all-time highs this week, and in fact it closed at all-time highs. So this is showing very good appetite for risk. Look at this move, this multi-year lows, and then we just completely negated this entire move down and then made all-time highs. So this is a very positive sign for the general stock market. Stock market is correlated very highly to the junk bond market. You can see here correlation coefficient, and it spends most of its time in a highly positive territory. In other words, when stocks are moving up, bonds are moving up as well. So this could be like a leading indicator for the general stock market. When the junk bonds are hitting all-time highs before the stock market, we could see that maybe the stock market is next. So that's a very positive sign, I think. And also this week we had a pretty strong move up for preferred stocks. You can see there was a clear hammer candlestick, gap up, and then follow through higher. So very strong move for preferred stocks. I mean, it's not a very big move. You can see that this was, from the lows here, it was about 2.3%. But this ETF is usually kept for its very nice juicy yield. So, we're basically close to all-time highs again. So I think also this one has characteristics of both bonds and stocks, and right now bonds are attempting to rebound, so I think the preferred stocks are kind of mimicking or attempting to rebound together with the bond market as well. And we'll look at bonds next, actually. Here's TLT, the 20+ year Treasury bond fund. This is the rebound I was telling you about just recently. I think there's a lot of things happening in this area. We have basically support coming in here from the previous lows. Looks like it's attempting to hold there. Also the 200-day moving average. Maybe it will bounce higher. I'm just not very happy about this chart. Maybe we will bounce higher, but I'm really concerned about that. I think they're gonna have a meeting sometime very soon. The Federal Reserve will have a meeting relatively soon, and I think they are seriously considering raising interest rates. So this could mean that bonds will come under further pressure. They're already off of all-time highs, and so far they have been making a series of lower lows and lower highs. Maybe bonds will bounce towards the 50-day moving average, maybe even towards this trend line. I don't know exactly. Or alternatively, maybe they'll just break this support and head lower. I'm not yet 100% where this is going, but there could be signs of a reversal that is taking shape right now. For example, last week we had a support break, and so far I don't think we recaptured that support break. We're kind of in a no man's land right now. The more diversified ETF, the AGG, I think it's a little bit stronger, so it kind of tested the support twice. So far it held, and now it bounced towards the 50-day moving average. Now again, if if the TLT rolls over, I think it will weigh on AGG as well, and we may see a move down. Of course, another scenario is some kind of a scare, and then bonds will extend its move up and maybe even break out to all-time highs again. Here's the HEG on the longer term time frame. Last week I said that this was a possible support break. I maybe, I don't think it's a support break actually, because it looks like we moved back up. Maybe we need a stronger move down. Maybe we need to break below this support low from the September lows. to to signify that we were having a reversal on our hand. But we'll see where this goes basically. And finally, here's TFI, which is a municipal bond fund. This one moved down quite strongly, I think, together with a TLT. So hard to see where this is going, honestly. Maybe we'll bounce higher, but if the general bond market rolls over further, I think municipal bonds will almost surely will follow the general market, the general bond market. Now, I think the very important action happened this week in the US dollar index as it built upon its breakout from a couple of weeks ago. Well, the breakout happened right there. Let me see what day this is. On the October 11th, I think, because it broke out above this level here. And then this week, last week it kind of moved up, and then this week it moved down, but then we had 1, 2, 3 times we retested this level at around 97.62, and all 3 times it was bought, and then we rallied on Thursday and Friday and actually took out this level as well. So the close this week was at 98.69, and the previous high was here at 98.60. So looks like we are breaking out above this high from the March as well. So looking at the weekly chart, I kept saying that this is a bullish chart. I mean, this is going back to 2014, so over the past couple of years, we basically had a very long flat consolidation. Now we're again approaching this 100-point mark, and I think if we break out above the 100 point, we could see a very strong move up in the dollar. It could be at least 9%, which is the depth of this pattern, but it could be even more, because we could count, let's say, from breakout here to breakout here, it's 12%, but it could be even more. It could be like 22%. So we're looking at if we break out above the 100-point level here, we're looking for at least 9% move to the upside. Here's the euro versus the dollar. Euro, I think, was the recipient of most selling this week. This candle on Friday is very ugly looking. This is a combination of both a strong selling pressure and absence of buying pressure. You can see that the bulls attempted to push the prices higher, but it was sold off immediately. So last week we ended up on last Thursday, the euro broke below this support, this level here from August, but then it rallied back above. So I was not sure if this level was broken, but this week clearly we broke it, and then we retested it on 2 occasions. You can see 2 spikes here, and then we sold off further. So it looks like we took out this level as well from July. Now the next level, of course, is from here, from June, and if we take out that level, we can go to weekly chart. So that level from June is at 109.09 here, I believe. Yeah, I think that's the level here. If we take out this level, of course there is some support around here, but the door will be open to retesting the lows, the 52-week lows. If we take out this level, I mean, there's more support here, but I think the retest of the 52-week lows could be in the cards if we take out this level. The British pound had basically 2 weeks in a row of inside weeks, so we had a big spike down, kind of like a mini flash crash. Next week, small week here, and then another smaller range even than the previous week this week. So it looks like we have this candle from this week is within the previous week's candle, and previous week's candle is within the previous week's range to that. So it looks like we have 2 inside weeks in a row, and we could see a move up or down strongly afterwards. Now this could also be thought as a triangle consolidation. Now, we're a bit overextended to the down. I mean, this is clearly a bearish security, but we're a bit overextended to the downside, so I think we could see a retest of this breakdown at around $1.28, or we could move. We could see a move even stronger up to 134. But overall, I think we can continue seeing new lows. I don't see a reversal just yet. Here's the US dollar versus Japanese yen, and I kept pointing out this chart. Looks like we have held support and rallied. So, in other words, the Japanese yen is no longer winning this game, and the US dollar most likely is now going to see, gaining versus the yen. So, US dollar versus Japanese yen will start to rise. Next on the agenda is the US dollar versus the Canadian dollar, and this is pretty clear uptrend as well. So these are multi-year highs, and this is a weekly chart, by the way, and so far looks like it's hitting this trend line from back here. So it looks like US dollar is appreciating versus Canadian dollar as well. And here is an interesting chart. This is US dollar versus the Swedish kroner. And looks like we are having a breakout. And this is what I was telling you about when I showed this chart here, the US dollar, weekly chart. We can see the similar pattern here for the krone. For the Swedish krone, looks like we are breaking out above this pattern, and this could be the move up around 9% or more to the upside. So to summarize, the US dollar is definitely in an uptrend, and I think a breakout above 100-point level could be extremely bullish for the dollar, and by extension extremely bearish for precious metals, which we will cover next. Alright, and here's gold graphed on the same chart as the US dollar, and this is just for illustrating the point that the gold and dollar move in the opposite directions, and I pointed this out repeatedly. I put in this correlation coefficient. You can see that gold and the US dollar spend most of its time in a negative territory. In other words, if gold goes up, dollar goes down, and vice versa. If gold goes down, dollar goes up. So right now, we had, a foray into the positive territory where gold and dollar were both moving up, but now looks like we're back into normal relationship, whereas dollar is rising and gold is dropping. So where is this going? Like I said, if the dollar strengthens further, this will weigh on gold strongly. So far, the strong dollar has caused this support break, and the continuation lower here, and looks like we may have taken out this low here on a closing basis. So we had a rebound, so far not a very strong rebound. We'll see if the dollar maybe will stop rising so fast next week. Maybe gold will take advantage of it. Next chart I wanted to show is GLD, and here what I wanted to point out most significantly is the very low volume. So we had a big drop here on high volume, and then this consolidation so far was on a very low volume. It's certainly below the average volume for the past few months. So I wonder if this means that people are not buying into this bounce, and maybe we'll see further correction in gold prices. If we do see further correction in gold prices, then we can easily take out this $1,200 level, and that could mean we're back in a bear market. Here's gold on a weekly time frame, and here's that $1,200 level, and I think if we take that out, the door is open to retesting 52 and multi-year lows. These are multi-year lows. So this whole premise of a new bull market on gold rests on basically this level. If we take out 1200, then we're back in the bear market. Here's GDX, and on this chart I pointed out these divergences here. So this is a bearish divergence. We had a higher prices in the GDX, but we had a lower lows in the advanced decline volume and advanced decline lines and on balance volumes, which are kind of like a it's the market breadth measures. Now we have an even bigger divergence here. If we look at the May low versus the October low here, it looks like we're making a higher low, but if we look under the hood and we look at the advanced decline line and advanced decline volume line, as well as on balance volume, you can see we're making lower lows in those. So that could mean that so far we have not worked off in other words, the market breadth is leading the maybe leading the prices lower, and maybe we'll take out this low at $22 and continue lower. Down below here at $12 or so are the all-time lows for GDX. So unless we rally pronto and just maybe meander here and rally from here, we could be back in the bear market, like I said. All right, moving on to the harder commodities. This is light crude oil, the actual futures on NYMEX, NYMEX. So far this week we had an attempt to break out higher above this June highs, and so far I don't see the breakout. I see that we came up there, but then we sold off. So where is it going? Not 100%, but I don't think that oil is in a bullish market just yet. Here on CME, continuous contract, on a daily time frame, looks like we were able to close here above the June highs, but like I said here on NYMEX, I don't see the close above this high, so not sure who to believe at this point. More importantly, I think, is a weekly time frame for oil, and we are smack in the middle of resistance from previous highs, this one and this one. There's more resistance even up here in the $52, $54 area, so already we can see that they're selling. People are traders are selling here. Maybe they're taking profits, maybe they're outright selling and shorting it. So so far I don't see a bullish breakout, and maybe we'll break out above 55 here, and then at that point we'll see more capacity coming back online. I mean, American producers can pretty much outproduce anybody in the world right now. Same goes for energy equity. Here is XLE, Select Sector Energy SPDR, smack in the middle of resistance. Lots of touches here in this $70 area, and then this breakdown here, and then another touch here and another touch. So we'll have lots of trading in this area. If we break above it, maybe we'll entertain a possibility that we're back in the bull market, but I just don't see it. I think we're still in a bearish phase here, and we may actually see a run lower, especially if oil doesn't break out here. Here's natural gas, continuous contract on the daily time frame. This is a bullish chart. I think it became bullish around here in June, possibly earlier. Depends on where you draw your lines, but to me this was a line in the sand. Had a breakout, a retest, and then continuation higher to 52-week highs. And actually, there's also 52-week highs. So I think this is a bullish chart. I think maybe we're approaching this trend line. I'm going to draw it in just to show what I mean, which trend line I'm referring to. So this could be this trend line, maybe like that. And maybe we're already hitting it, and we'll stop and bounce higher. Longer term, I think is a bullish chart as well. Here, I think it became bullish around here, and this is the breakout that I'm referring to right there. Last week I said that we're basically attempting to close the gap from 2014, and last week we came up just about there, and then I said that maybe we're gonna see some selling. Lo and behold, we got some selling. So for the week it doesn't look good. We lost, what is it, 8% or so, but I think generally speaking this is a bullish chart, and I think eventually the buyers will step in, and I think the prices will most likely going to be higher from here than lower. And finally, I wanted to show another ETF that I don't normally trade, but this kind of interesting chart. This is a Bloomberg Livestock sub-index, so you can trade futures of livestock on a retail level. Clear downtrend here, and no, these are all-time lows actually. I mean, because of the slippage for this ETF, these are all-time lows, but these are more like 52-week lows for the actual underlying index. So this, I meant multi-year lows, not all-time lows. But what's interesting, of course, is this big volume here on this weekly candle. So this volume is really large. It's almost as big as, even bigger than this previous one. So I wonder if we are seeing possibly some sort of a bottoming pattern. So maybe we'll bottom out and then consolidate, maybe rally from here. But this volume is kind of interesting, and maybe we'll, it warrants definite watching in the future, and maybe we'll see a turnaround in the prices of livestock finally. Right, if you like what you're hearing, please consider signing up with MasterChartsTrading.com, and please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling, and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.